everyone, and welcome to Property118 Meets. My name is Gabriella, and today I'm joined by Christine Stedmann, a residential and commercial mortgage consultant from Brooklands Commercial Finance. Thank you for joining me today, Christine, and how are you?
Thank you for having me. I'm really well, thank you, Gabriella.
Oh, good. So before we get started talking about all things mortgages, I want to go back in time a little bit and ask what attracted you to the finance sector and how did you join Brooklands Commercial Finance?
Well, I've always been in the finance sector, actually. I've got over 10 years of experience in the banking sector. I've been in personal banking, commercial banking, as well as corporate investment banking. But I've always been on the lending side of things. And why I joined Brooklands is because at the time when I was working for the bank, I was only really able to promote that bank's products. So by becoming a broker and also joining Brooklands, Brooklands has access to the whole of the market. So I'm able to better service my customers and find them the best product for their financial needs.
Yeah, no, that sounds really, really great. And so now using your expertise, if we go on to mortgages now, and if we can first start with buy-to-let mortgages. So can you sort of briefly explain how a buy-to-let mortgage works and how Brooklands Commercial Finance can help in selecting the right mortgage? As I mean, there's so many, types of mortgages out there, and sometimes it can be like a little bit of a maze trying to find the right one.
Yes, well, typically, buy-to-let lenders typically would lend up to 75% of the property value to landlords. There are lenders who will go up to 80%, but generally speaking, most buy-to-let lenders are willing to lend up to 75% based on the rental yield. And buy-to-let mortgages are generally interest only, which means you only pay the interest monthly and not the capital. As opposed to a residential mortgage, you pay a capital plus interest repayment every month. Buy-to-let mortgages are not regulated by the FCA, with the exception of consumer buy-to-let, which is when the landlord lets the property out to his or her very close family member. So, for example, your children, your parents, a sibling, cousin, and those consumer buy-to-let mortgages must adhere to FCA affordability rules, just like a residential mortgage does. The second part of the last question was, how does Brooklands help? Well, all our advisors here are able to search with our sophisticated sourcing tool and search the best product for the client. We're able to quote fixed rate mortgages as well as variable rate mortgages to our customers. In terms of eligibility, what types of properties, historically, buy-to-let mortgages were only available to single residential units. But at Brooklands, we work with lenders, specialist lenders, who will now offer buy-to-let mortgages to properties such as HMOs, new build properties, student accommodation, as well as PRS schemes.
No, that's really great to hear, how sort of Brooklands Commercial Finance can help with that. And I mean, are there any common mistakes that you see that landlords make sort of with buy-to-let applications?
Yeah, some landlords that I come across, the general feedback had been they wish they didn't buy a property in a very low rental yield area. What it does is that it will impact the maximum loan available to the landlord due to the low rental yield. Another pitfall or potential common mistake I see landlords make, is they sometimes underestimate the cost involved of running a lettings portfolio or owning an investment property. Mainly is they forget to factor in the monthly cost if they're hiring a lettings management company to manage their apartment or manage their flats. Also, when purchasing an investment property, it is not just the purchase price. There are other closing costs such as stamp duty, legal costs, etc. So that tends to be a bit of a bump along the road. Another mistake is landlords sometimes don't spend enough time to vet their tenants, which can pose some major challenges down the road. And finally, I would say landlords would probably underestimate buying an investment property in an overly saturated area. So, for example, if they are buying in a flat, in a tower of flats, and all of them are investment properties, then they're competing with finding a tenant, and they may see some void periods because the supply is so great, and the demand is small.
Mm. No, that's really interesting to hear about all the sort of common mistakes and stuff. You do realize that it just sort of builds up over time. And I mean, if we can just move on to residential mortgages now, I mean, can you explain how Brooklyn's commercial finance can help with residential mortgages? I mean, such as for first-time buyers or home movers?
Yes, of course. So at Brooklands, all our advisors are residential mortgage and protection advisors, and we will guide the first home buyers through every step of the process. It is very important for first home buyers to understand the process of buying their first home. And the second part of that question is the portable. So if the mortgage is portable to another address, we would then explore the possibility of, is it a better benefit to apply for a brand new mortgage, or just arrange for their current mortgage to be ported to the new address. Sometimes we would also see borrowers come across where they're about to purchase a property, but they are stuck in a chain. In those instances, we would think maybe suggesting exploring the option of short-term financing, such as a bridge, so they can have the funds to make their onward purchase and not having to wait for a potential buyer for their existing property listed for sale.
No, really interesting again to hear all about that. And I mean, say you want to start renting out a property. So can you switch from a residential mortgage to a buy-to-let mortgage? Is that possible?
The answer to that is yes. All you need to do is to ask your current lender a letter of consent for you to let out your current property and for you to buy your own property. I would suggest, if you have intentions to do so, to contact your current bank as soon as possible, because it's not something they can do overnight. It needs time to prepare, and it's paperwork, and sometimes you get stuck in a queue. So if you do intend to do that, it's best to get in touch with your current lender as soon as possible.
Yeah, and can Brooklyn's commercial finance help with doing that as well, from switching
We
from a
can.
residential to a buy-to-let mortgage?
Yes, what we'll do is help facilitate the process, but the person initiating the request for a letter of consent from their existing borrower, for existing lender, sorry, would be the client themselves. And then we will then use our sourcing tool to find our client a suitable residential mortgage for them for their onward purchase. Yes.
Yeah. Oh, that's great to hear. So hopefully anybody listening, then Brooklyn's Commercial Finance can help. And then I also wanted to ask you as well, we hear, hundreds of stories of sort of people needing to act quickly when it comes to finding mortgages. I mean, just how quickly do things change now with lenders pulling products to reprice them?
Yes, I would say in the last 18 to 24 months, the mortgage market has been quite volatile, where we have seen lenders pull their products with little to no notification at all, which causes stress and chaos to brokers and borrowers alike. So that's not been very good, but we have seen that happening less and less. In recent months. And hopefully, this would suggest that we are entering into a more stable period in terms of mortgage rates. The rates are coming down ever so slowly, but it is trending in the right direction. So hopefully we will all be able to enjoy a little bit more stability.
Yes, hopefully, fingers crossed. And if we could just go back quickly to sort of the buy-to-let mortgages stuff. I mean, are there any sort of special eligibility requirements for buy-to-let mortgages, say, compared to residential mortgages?
Generally speaking, not all lenders have this criteria, but generally speaking, buy-to-let mortgage is the biggest difference between buy-to-let mortgage and a residential mortgage, is that the buy-to-let lenders will look at the rental income. not the client's income. Also, most of the buy-to-let lenders would like the borrower to have at least £25,000 a year annual income, but that is not a definite must. There are lenders out there who doesn't require this. And buy-to-let mortgages are generally interest only, where residential mortgages is interest plus capital repayments. For buy-to-let mortgages, there's also some cases where the rental income is not sufficient to service the debt. Some lenders that we work with at Brooklands will consider top slicing, which is other source of income that is available to the borrower to service the mortgage. So that's something that's not available in a residential mortgage.
Really interesting to hear that as well about the differences. And then as well, I mean, as I was saying earlier, there are so many types of mortgages out there. It can sometimes feel like a bit of navigating a maze. So, can you explain what a second charge mortgages are and how Brooklands Commercial Finance can help?
So second charge mortgages come in handy when the borrower has a need to have additional borrowing against their home. So for example, an existing borrower already has a 5-year fixed mortgage against their home. They're enjoying a relatively low interest rate, but it is a fixed mortgage. So if they were to break that and borrow additional funds against the same property, they would have to be subject to an early repayment charge. So that's when second charge mortgages will come in handy, whereby the borrower will not have to disrupt the current loan facility, but also be able to raise additional capital against the same property. How it works is that the second charge lender will then basically sit behind the first charge lender. The borrower will need to, and the broker will need to advise and notify the current lender and ask for a consent to have a second borrower behind their charge.
No, again, really, really interesting to hear that as well, because as we've sort of been saying throughout, there's so many different types of mortgages. So it's really great to hear about maybe some of the ones that you might not have heard of. Because I mean, before I didn't know what a second charge mortgages was, so it's really great to hear more about those. And I mean, finally, I mean, as you were saying earlier, the mortgage market has been quite volatile lately, but hopefully, some more stability to come in the future. But I mean, what do you think the future of the property market holds for landlords? I mean, what would you say are the biggest challenges and opportunities?
Well, I suppose no one can really tell the future. But I would say the landlords that I've come across have expressed challenges they're facing mainly with the recent government legislature of the abolishing of Section 21. That's been challenging. And also, landlords no longer can prejudice against tenants having pets in lets, which I know from general feedback for hearing from landlords, they don't really prefer tenants having pets. And thirdly, another challenge is that landlords feel the tax changes recently imposed on landlords have been quite punitive, especially for those who are who own properties, investment properties under their personal name, because there's no longer tax breaks on that to to sort of write off the cost against your profits. So those are the challenges. I think the great news is the rates are coming down. It is coming down slowly, but it is trending in the right direction. So rent, in terms of rental market rent will continue to increase, which is great news for landlords. And hopefully we will enter into a more stable environment. And if anyone is considering investing into properties or expanding their current investment portfolio, it's good to pick up the phone and give me a call, or any of my colleagues at Brooklands. We will be happy to guide you through the process.
No, that's really great to hear. So hopefully a step in the positive direction. So thank you for joining me today, Christine, and thank you for letting us pick your sort of mortgage brain. It's been really, really great to talk to you, Anne, about mortgages. So thank you so much.
Thank you. It's lovely to be here.